Hello guys, I know you must have watched a lot of Volatility 75 index strategy videos on YouTube. Different setups, indicators are being used. But have you ever seen a live video to test that strategy on your account to meet all conditions and properly make money with the strategy? So that's what I'll be doing in this video. So stay around and watch how it goes. As you can see, these are the indicators. Make sure you add them. I will leave the link to the previous video in the description below. So I'm gonna make uh, a deposit now of $50 to test the strategy. I'm gonna make a deposit of $50 because let's say 80% of my students always start with a little balance size, which I also recommend for you to start forex with. You have to start with a little deposit and then grow your accounts um, high. That's the best way to trade forex, so your risk management is on point. So yeah, just made a deposit of um of $50. So we are gonna see how it goes. Yeah, so let's trade this strategy. As you can see, you're going to be on the 30 minutes time frame, and you're going to zoom out, and you're going to go in 3 times. Just 1, 2, and 3. So this is what you want to do. But before you enter the market, like in this scenario over here, you have to make sure that you're on your stochastic oscillator. Your RSI is at the 20 level. It doesn't necessarily mean it has to touch or be under. When you see that your RSI is around the 20 level, you can take a buy, and then when it gets to the 20 level, that's a good confirmation to take another buy. When it goes beneath, then you can also buy. So you can see the three conditions to buy with the strategy. So when it's around the 20 level, just beneath, you can buy. If it goes up to 50 to your TP1, that's good for you. If it goes down again to touch the 20 level, that's another opportunity to enter the market again, as you can see on previous scenarios. So in a situation like this, we could have bought at this point. This is the point on the stochastic chart. Around the 20 level, you should buy, and then you are gonna go up to the 50 level. Like if we had bought at this point, then by now our TP would have hit as almost 10 points, as you can see, from 626 to 636. That's $10 on the lowest lot size. That's $10 on the lowest lot size. I mean, that's enough. So but if you're gonna hold it to the second TP around 650, then you forfeited over another 20 points. That's almost $30 on is the lowest lot size of 0.01. Okay, so guys, because this is a live video, I have to take a running position for you guys to see how to properly make money with this. So I think I have to pause this video and wait when I see a good entry, because now the market is at the 50 level. We can't go in at this point because it's ranging, and on the 50 level is a no-go level, which is our TP1, of course. So but if we had bought at this point, then we can close our position profit at the point, or if we are going to hold to the 80 level. So I'm going to pause this video and come back again when I found an opportunity in the market for us to trade. Guys, so you see, after a while the market actually bought to the almost 650. Just like I said, it will, but just because we saw it late, we saw it at the 50 level, we couldn't enter. Don't make that mistake to go in a late trade. It's okay, because right now the our stochastic oscillator, our RSI is almost at the 80 level, so it's pointing out another opportunity to sell the market now early. So most time you should wait for the envelope to also start pointing down, but the envelope will only start pointing down most of the time when the market is already at the 50 level, when the TP1 is already hit. So you should just go in with the RSI on the stochastic oscillator and then use the envelope to confirm your position to TP2. I hope you understand. So in scenarios like this, you just go in to your TP1 or 50 level, and at the 50 level you wait. If the envelope is pointing downside, then you guide it down to TP2, and if it's still pointing up, not well set, then you should just take your profit at the TP1. Okay, so on this market here, the market is almost at the 80 level, so we have to wait. You can sell now, you can sell if the market goes up again, you take another position, because then it would have properly touched the 80 level, you know. I hope you understand what I'm saying. But if it doesn't buy more, you're still going to end up in profit. So you can sell at this point and sell when it's properly touched. So I'm going to open one trade now, and then if it goes up, I'm going to open another position to our TP1, and if it doesn't goes up, we're still going to end up in profit. So let me do this. I'm going to open one position now. Yes, in on the almost at 80 level. So we're going to hold this position and see what the market does. As you can see, so you're going to see if the market starts going down, then I will decide if I can trade more positions or not. But we're just going to run this one, and I'm going to pause this video and see what the market does from here. Hello guys, so as you can see on our stochastic oscillator chart, we got our second touch at the 80 level. So at this point, everybody is going to go into the market and sell. Okay, we're going to go into the market and just sell, and then you go start looking for where you're going to place your stop loss depending on your account sizes. All right, so let me just zoom out 3 times again, and zoom in 3 times just for the sake of the video and those just watching now. So you go 1, 2 and 3, and do it again. 1, 2 and 3. Yeah, so at this point we can use the most recent previous reversal as our stop loss when we are selling. So I think I will use this region as our stop loss. I will use 6, we can just say 660. That's 10 points for our lowest lot size. That's a lot. But let me see. Okay, 660 is perfect. So at this point it has properly touched, and now we can go in for our second position and go into the higher time frames to look for where we're going to put our stop loss. So I will take my second position now, and as we go, you all will see if I would take more positions or just hold the current one running. Yeah, so we are trying to sell now and sell back to the 50 region, and then during the 50 region we're going to see if the envelopes are pointing downside or they're still pointing upside. If they're pointing downside, we're going to take it to the TP2. If they're pointing upside, we're going to go away with our profit at the TP1. So let's see how it goes. Let me see if I would just leave my phone and probably watch a movie or something, so you all see how the trade was going. Okay, let me zoom out a bit so we can see how it's running. Yeah, I think like this is okay. I'll leave my phone for a while, guys. All right, guys. So as you can see, it's been more than 5 hours trading. You see, it requires a lot of patience. But as you can see, the first time my stop loss was hit, and it got two of my positions out. When I set the stop loss at 660, and then I took another entry at the reversal point. Yeah, and I placed a stop loss just above the next reversal, as you can see on my chart, because I know it was touching the 80 level the second time. So it was a good time for me to enter the trade again. So as you can see now on our stochastic oscillator chart, the trade is at the 50 level. But to properly check, we have to zoom out to the extreme and go in 3 times. 1, 2, and then 3. Okay, 3, yeah. So as you can see, it's beyond the 50 level. You should close your positions, but as for me, but you should also confirm with the envelope. I meant to say, if the envelope pointing up, then you should close all the positions and wait for a new entry. But when they are pointing down, then you can hold it to the 20 level of TP2. So in our case here, the envelope are almost pointing down. Yeah, we can also see they are pointing down. Now I could close, but since the envelopes are already pointing down, I would hold to the 20 level. Yeah, I could hold to the 20 level, because you can see on our oscillator chart, the trade hit the 80 level twice. That's why I took my, after I was caught out of the market with our stop loss being hit, that's why I entered again at this top level, because we got a second touch. So that's another opportunity for me to enter the market. And then now it's at the 50 level. So if you just join at the second touch, you should close now. But unlike me, and because the envelope is pointing downwards, I'm gonna hold down to the 20 level, which should be somewhere around 630. 630, yeah. So that's where I'm gonna hold it to, and we'll see as it goes. I'm gonna leave this trade running again, and I will show you all in a few. Alright, good guys, just so you know, as long as you've placed your stop loss, you've met all the conditions, you sold properly at the 80 level, then you should just hold your positions. Okay, I've been doing something else with my phone for a couple of hours and just checking it um quickly, you know but that's when I recently checked, and I saw that I've been kicked out of the trade. Two of my positions have been kicked out, because you guys saw when I said the stop loss at 660. So just so you know, as long as you've done everything, you zoomed out twice, you've you know met all the conditions, then you are good to go. You shouldn't worry, just place your trade. Don't be emotional with trading. That's not your idea of trading. You should be making money with confidence. Okay, if you are emotional, then it's just like you are gambling. This is not gambling, this is forex trading. It's a whole different thing entirely. So as you can see on my channel, I place the stop loss over there, because I know if it get activated, I'm going down properly to the 20 level. So this is official. I'm gonna hold my positions to the 20 level. You can see the envelopes. I told you guys that when we hit the TP1, that is when the envelopes would already be pointing downside. So if you've been waiting for the envelopes before you could enter the market, you know you're going to be entering at the TP1 level to take profits, level 1. So you should just enter with the RSI at the 80 level, and just use the envelope to confirm if you are going to hold to the 20 level, or if you should just close. Like if we, as we hit the TP1 and the envelope has still pointing up, then no, we should just close everything and we go out to the market. I'll be going out to the market with $4, but just because the envelope are pointing downside, I felt it's a good time for me to hold some more. So let's see how it goes. So hello guys, it's been a while. It's been an overnight trade. I just woke up now, and this is what we are left with. As you can see, our sell stop is gone. It's got activated and it's the first it's TP, as you can see over here. Yeah, so that's for our sell stop, and yeah, you can see um even though we got stopped out with about $11, well, I took my second position at this level because on our stochastic, on our RSI chart, you can see the second touch. Well, I got in at this level, and now we are in profit up to the 630. Remember, I said in this video it was going to sell down to the 630 level, which is going to be close to our 20 level. So to properly check, as usual, to make sure you are on the right path on how to close your trade, whether you should hold long or you should go. We're gonna zoom out again. Okay, we're already at the extreme, and then we're gonna go in 3 times. 1, 2, and 3. Is that correct? Let me do it again. 1, 2, and 3. Yeah, on our 30 minutes time frame. So as you can see, got closed $10 or almost $10, and this is our running positions, $40 up, downside. Yeah, so you can see how easy the strategy is. um, Very easy. As long as you've met all the conditions, you are good to go. Even though if you hold and it hits your stop loss, you have to check if it's at the 80 level, then you enter again on a sell. So in a situation like this, I'm gonna protect my trade. I'm gonna put in stop loss and profit as we hold to our TP levels around the 620 region. So I'm gonna put stop loss in profit. Probably put my stop loss here, just above the previous reversal point. So that's why you should always put your stop loss in profit, the same way you put your stop loss at the previous reversal point or resistance when you just entered a trade freshly. The same way you should do it when you are in profit. So that's it for this video, guys. I should probably hold the trade a bit longer just to show you guys if our TP was actually hit, so that we will be able to double our account of the $50 deposit. Made $50. It took me a long time, guys. This has been hours almost. Yeah, it's been more than 12 hours because I slept and I woke up just now, still trading the Volatility 75 index. So you see, it requires a lot of patience. You probably go and trade boom and crash on the 1 minute time frame using the boom and crash or the spike strategy to trade that, and just keep on checking on the Volatility 75 index to see if your trade are on these regions. If it's on these regions, be getting ready to sell. If it's on this region, be getting ready to buy. Just like now, we should be getting ready to buy, close our sell, and prepare to buy upside to the 50 and to the 80 level. So I'm just gonna pause this video again and show you guys how it went down. Alright guys, so after 3 long days, as you can see, yeah, because it was I used 2 days to check if there's an opportunity for us to trade the market before I deposited, and then we used 1 day when we missed the buy opportunity, and then we had to wait for our sell. And now after 3 days, here we are. Second position hit. We take profit, we jump, and as you can see, this my running trades. Yeah, but and then we have to check if we can close now. I think we can close now, but really check. Sorry about that. Going 3 times. 1, 2, and 3. Okay, so as you can see in our